Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Kevin Davitt, Head of Index Options Content at Nasdaq, as well as Troy Cates and Garret Paolella, co-founders and managing partners at NEOS. We're here to discuss an ETF that captures the Nasdaq 100's upside moves, in addition to the fund's primary goals of income generation and tax efficiency. It's great to have all three of you with us. Welcome to Trade Talks. Garret, let's kick it off with you. Clearly the elephant in the room, looking at the macro environment, how quickly the dynamics are changing and its impact to the Nasdaq 100.
Yeah, sure. So I think a lot of investors, right, are concerned around inflation, what's going on with tariffs, how is the new administration, pairing with working with the Federal Reserve in ways to try to not push us into a recession, but certainly be driving, economic policy and certainly political policy right now. So obviously you're seeing from the Nasdaq 100 perspective versus other broad-based benchmarks, just more growth-oriented, more tech-heavy. So you're getting a larger sell-off in that index relative to others. But I think these are the natural, headwinds that we've been up against for the last several weeks now is really how is the Fed going to be managing a new administration, tariffs, and ultimately a big swath of economic data that we're going to be getting this week.
Right. And so, Troy, you can see why investors would have an interest in capturing any sort of upside enhancing yield while they're going through the machinations within their portfolio.
Exactly. We're seeing a lot of advisors and clients looking at our products, specifically QQQI, and saying, I want to have exposure to the Nasdaq 100. I want to, during these rough times, take advantage of the volatility in the market and be able to receive income in a tax efficient manner. And that's why we've seen a nice growth in our product over the past year.
Right. And then, of course, Troy, you get the exposure to the moves that the QQQs or the Nasdaq 100 has had. How has it performed, the QQQI, relative to the overall index?
So if you look at it as last year, which is almost a full calendar year for us since we launched the product in late January of last year, it captured almost the entire upside of the Nasdaq 100. Now, we always tell people that's not normal, but for that environment where the Nasdaq was up about 20% during that time frame, this product was up over 19%. So we captured a lot of that upside while still providing a tax-efficient monthly income for shareholders.
Right. And of course, Garret, you get that through the ETF wrapper, but can you tell us more about the methodology behind QQQI?
Sure. So we're gaining exposure to the Nasdaq 100 by fully replicating all of those equities within the product. And then on a monthly basis, we're really instituting what we call a laddered short cover call portfolio. So we're selling Nasdaq 100 index options against that portfolio, leveraging that volatility Troy was just speaking about to generate income on a monthly basis that can then be distributed out to investors in the form of a monthly distribution. So you're getting exposure to that Nasdaq 100, you're selling options against it in order to generate, income, all with Nasdaq 100 exposure and being able to distribute that out on a monthly basis to the shareholders.
And then you also get the tax efficiency because of the ETF wrapper.
Yeah, so there's tax efficiency in a couple ways. First and foremost is that ETF wrapper. Second is we trade index options within this product. And so you're getting a preferential tax treatment because they're cash settled. And so that just means that 60% of any of the income generated is taxed at a long-term capital gains rate and 40% at short-term. And then also lastly, in our investment methodology, we do think about tax loss harvesting. So when there's opportunities to tax loss harvest for the fund's benefit, we will implement that as well. So there's a couple of ways that we really focus on the tax efficiency piece in our product relative to obviously what's been a growing segment overall with trying to generate income off volatility.
Right. And of course, Kevin, this is a great time to bring you in as we're talking about the index more specifically. And your team, I mean, you've seen tremendous growth in terms of how advisors, investors, institutional investors have been leveraging Nasdaq 100 index options.
That is absolutely the case, Jill. The points that Garret and Troy are making here, I think their product and this sort of income and exposure is something that's really coming to a head and has over the past couple of years. These guests have been around and seen the evolution of optionality in the ETF wrapper for many, many years now, and their knowledge, I think, shines in this scenario. When they talk about capturing essentially all of the upside last year, their ability to navigate with that kind of covered call strategy by utilizing the index options and the inherent efficiencies there, they are echoing the message that our group preaches regularly. I think both the points about broadly seeking NASDAQ 100 exposure, but with some kind of guardrails, some kind of income goal, is a message that's broadly resonant. I think the backdrop that we've seen over the past couple of weeks where markets have been moving lower, now that is volatility like most investors are used to, downside. The fact of the matter is that over longer time frames, we have seen significant volatility, if you will, on the upside in the Nasdaq 100. And I would argue that the approach that NEOS takes here is able to allow for capture of significant portions of that upside. And in an environment like we're seeing now, where markets are pulling back, you have some cushion, and that's meaningful and it can lead to outperformance over long time frames.
Yeah. And Troy, let's talk about that for a moment here, because Kevin makes an excellent point. We did see, momentary blips of volatility throughout COVID as an example, but this feels a little bit more prolonged and a little bit of a trend. And there's a generation of investors who perhaps might not have traded or invested through this kind of environment. So what are you hearing from advisors? How are they allocating this type of product within investor portfolios?
Sure. So we hear from advisors that even in times like this, where we're seeing the market sell off, we're seeing volatility pick up, they look to our products to really gain some more exposure to the Nasdaq 100. And they know with that pickup in volatility, we're able to bring in a little more income and distribute that out, as well as be able to, where our rules-based systematic strategy works, is right further out of the money. So they know when the market does bounce, and we have seen it happen before, that we could capture a lot more of that upside when it does happen.
Right. And Garrett, to wrap up here, that is the beauty of the product. Trying to replicate that type of strategy would not only be expensive, but it's inefficient for advisors and other investors. So having this all within one fund takes a lot of the guesswork and the complexity out of it.
It does. It lets investors really focus on their asset allocation, or really what their estate planning goals are, as opposed to being stuck to the screens on a daily basis, trying to roll from one option to the next, having multiple different options in the portfolio, figuring out what part is distribution, the tax piece. So there's a lot of elements into it that wrapping it into an ETF structure, having the liquidity, having the transparency, but the sophistication of the product and the strategy available to be really easily slotted into the portfolio as an asset allocation is really the greatest benefit for investors.
And that's why we leave it to you experts. Appreciate everyone's insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.